Hi, this is rture, and in this video I'm going to show you how you can use the CVD to spot if there might be a short squeeze coming. This video is sponsored by crypto.com, the only single exchange that allows you to trade more than 200 pairs with up to 10x leverage, earn daily rewards on your balance with no lockup periods, purchase newly listed tokens at up to 50% off. Find all the information right at the description of this video and earn extra $50 USD worth of CRO using the link below. Let's start by setting this chart up. Visit coinalyze.net and pick the first chart, BTC USD Coinbase. You can use any Bitcoin chart for this, but I like to use the Coinbase chart. Then you'll probably see this chart, and we want to add the aggregated CVD from the futures coin margin contracts, the one from the stablecoin margin contracts, and the aggregated CVD spot. So click them all, and you'll have this chart. You can also save it as a template if you're logged in, so it remembers these indicators for you when you jump in. So let's start with what the CVD is. The CVD shows the aggression in the market. It doesn't matter how much the indicator is, like what's the value of the indicator, but it's more about the direction in combination with the chart. So if the CVD is going up, that means that people are going long and they are crossing the spread and going market long because they really want to be in a position. So those are the aggressors in a market. When is this interesting? It's really interesting when there are differences or divergences with price, and especially because there can be a difference between the futures and spot. And that's what I'm going to explain to you in this video. So let's go back to my first screen, and this is price action from the 29th of October. And what we see here is that after price went down a little bit, price started moving up. And let's take a look at that CVD. We saw before this drop, or actually also during the drop, that the CVD was going down. You can spot that in the chart too. So that means that the aggressive selling in the CVD made the price go down. But what's interesting is what comes after. So let's remove these lines from the chart, because what we see at that bottom is that price starts to slowly trend up again. And what gives quite a contrast is that futures, if you draw something like this as a general direction, is basically going sideways if you look at the coin margin contracts, but if you look at the stablecoin margin contracts, it's going down basically. And that creates some kind of a divergence, especially because if we look at the CVD spot, there is that aggression going up. So what this tells you is that the spot price is pushing the price of Bitcoin up, while futures are basically still shorting. And it means that if they keep shorting and price is going up, they will have to exit at a loss. And if you have to exit a short at a loss, you have to buy. And often those short squeezes bring price a lot higher and create these impulse moves. So what you can see afterwards is that price starts to accelerate and the aggression comes back on all these CVDs, but especially on spot. And it can give you quite a nice rally. This one was almost 3%. So if you spot a pattern like this, where futures are shorting while price action is actually going up, and it's also supported by that aggregated CVD on spot, that's where you could expect a short squeeze. This is on a low time frame chart. It's on the 5 minute, so it's only a shorter term move. But you could also try to look for these patterns on higher time frames. Thank you for watching this video. I hope you learned something new and you can now do your own analysis with this CVD and spot if there is a short squeeze coming. If you have any questions, please visit us at thebirbnest.com and let the team know in the Discord. Have a good day and see you in the Birb Nest.